down.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock picks trading podcast in my ears, guiding me through my
Am I not hearing the music for some reason? Hold on.
Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily
That's
stock
why I had the volume down.
podcast in my
Mother
ears,
F.
guiding me through my hopes and
Why did I do that?
Tune in
Crazy.
daily, don't miss a single show. Sign up for the newsletter, let us
Morning,
help you grow.
K-Josh.
Taking risks, making
All
moves, seeking
links
success.
here.
Together we'll conquer, no room for any less. Listen now.
Paste. Boom.
Every morning I wake up to the
Then we're gonna pin
sound
this
of the
mofo.
trading bell. My heart starts to
so-
pound. Daily stock pick trading podcast in my
Put this user in
ears,
timeout.
guiding me
What?
through my
That is
hopes
me.
and fears. Tune in daily, don't miss a single show. Sign up for the newsletter.
Why am I,
Taking risks, making moves, seeking success. Together we'll conquer.
Okay, hold on, I gotta yank out my...
Every morning I wake up to the sound of the trading bell. My heart starts to pound.
She wants a bed.
Trading podcast in my ears.
She hears the music and says, I gotta listen to Daily Stock Picks. We're talking about the dogs, just so you know. Not anybody in particular. Let's see. I don't know why I can't pin this comment. It's not letting me.
Every morning I wake up to the
I have to go to
sound
live chat.
of the trading bell. My heart
maybe
starts to
boot.
pound. Daily stock pick trading
All
podcast
links
in my
here.
ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter.
Pin
let us
message,
help you
there we
grow.
go. I'm able to
Taking
do it.
risks, making moves, seeking success. Together we'll conquer, no room for any less. Every
Morning,
morning I
Wendy.
wake up to the sound
I don't know why the hell this is happening.
my heart starts to pound. Daily stock pick trading
come on.
podcast in my
Why does it log in and then it takes like
guiding
an
me through my
hour?
hopes and fears.
I turn on my do not disturb.
Tune in daily,
Maya,
don't miss a single show.
They
Sign up
don't
for
need
the
the,
newsletter,
they're
let
gonna
us
want
help
the
you grow.
door
Taking risks, making moves,
lodged up,
seeking
yeah, so
success.
they can open it
Together
up.
we'll conquer, no room for any less.
I got
Listen
mine.
now.
Thank you.
Every morning I wake up to the
I'm getting everything set. So I might as well show it. I'm not beyond let's see, live. There we go. And then I get an ad. Hit the thumbs up button if you would. Be so kind. Skip. There we go. Big show today. Why do I look green? I don't know what the hell that's about. I have two cameras. I look green in this one, but I don't look green in this one. Huh. I promise I'm not sick. So, I'm not sure exactly what's going on. There's a lot today. I mean, a lot. There's almost too much. I was looking at Substack year-to-date return. I mean, this is the S&P 500, and I looked at this during the paid member stuff. There's just so much good stuff here. I mean, so much good information from just this. You know, listing the top 500, the S&P 500 by gains. What's the worst performer? Let's say Intuit, 45%. Workday, AppLovin, Gartner, GoDaddy, AppPump. Notice anything? Software's kind of you take the top the bottom like 10 and it's software. And so it's an interesting mix. We're going to do Earnings Hub. I'm going to open that up. I've already got that opened up. So if you're not watching Earnings Hub, Circle killed it. Just absolutely killed it. Up 17%. Lowe's, not as good as Home Depot, and it was up yesterday, and then we get brought down. Still, you know, a good one. TJX, kind of flat, but killed it. Hot, up 1.52%. Meanwhile, they didn't do shit. I mean, look at that. Missed by 7% on revenue, missed by 1,900%. And this is a strong buy. This is probably a buy the dip. Let's look at the after hours in this one. Because I know this is one that I think Eli just posted about. He likes this stock. I too think this one. I mean, listen, you make 281% on the 4-hour algorithm versus 516. I'm okay taking 281 with having some safety. This one in pre-market is up now 1%. I mean, that's probably super low volume. I mean, you can see a spike there at 8 o'clock, but what's the, let's see, is it still a strong buy? No, it's a hold. Wall Street says it's a strong buy. 15 analysts. That's not nothing. I mean, that's $70 price target. And Eli picked it perfectly. He said $60 is going to be a resistance. And hopefully, if you buy at 59, you don't want 60. Let's look at the 4-hour on this one. Let's take it out. And let's just look at no, I don't want to switch time zones. We can put, if I were looking at this one and I were just putting some lines down, I'd probably put that one there at, say, 50. And I would put, between 50 and 60 right there. If you can get over that, that's great. Weekly, you're still stretched. Okay, you two, calm yourselves down. The dogs are going crazy. I don't know why I look green here. It's not a good look. But hot, yeah. But we'll open up Earnings Hub. Software, big reports tonight. Nvidia. I mean, that's super interesting. Is Nvidia, okay, I still have these. Are we finally going to get out of that range? Circle reported, and Circle is flying 20%. I mean, crypto's not dead. That's a great report. I do want to talk. This phenomenal. Just, I've got to buy Bloom Energy and Hood. I mean, I've got to buy more of it. I think one of the missed in the market is if Paramount wins this, I think Netflix flies. I think, based on just the company alone, I think Netflix does really well. I'm not sold on the Rivian thesis, but I tell you what, they make a great argument here. I mean, Hamid is just so. It is rumored that Stripe may be buying PayPal, and we're seeing PayPal fly over the past 3 days. Is it? I basically went and asked Perplexity, could that happen? And Perplexity had a great nonsense, just a great. By the way, SanDisk. If you didn't see it, there is a big short, Citrini research, and this one's different. Citrini. I think it's different than that. This is the global crisis. Yeah. I should probably bring this one up. You know what? Hold on, I'm going to change the order of this. We're going to cut that and then go the short report. Yeah. Yeah, we'll do that. There we go. Because there was a short report. SanDisk there and the big announcement. There we go. There was a short report, and then there was this. You know, I should cut this out too. Hold on. I'm going to move this. No. Cut. And then where's the Citrini? There we go. We're going to open that one later. I got confused between the SanDisk short from this one. This is Morgan Stanley talks it. Yeah, we'll talk about SanDisk. SanDisk, I have a bunch of memory stuff, and I think it leads me to believe that there will be a Citron, not Citrini, Citron, short SanDisk. There we go. And it leads me, this is the actual Citron research, actual report. And we'll go over alpha picks. We'll go over some stuff there. We're going to go over office hours. And IBM's Anthropic. I'm going to bring that up again because any reaction is an overreaction. I was on Investing Experts. So you can see that on Spotfiy, or if you're in a TrendSpider subscriber. I don't think there's any comments on this yet. There is a comment. Let's see. Do I get positive or negative? And am I going to rage, or am I going to be baited? Gary is great. His podcast, after listening for a while, I joined Seeking Alpha and Alpha Picks. His positive, disciplined approach encouraged me to do my own research on Seeking Alpha. Thank you, Mark. Mark Schletta. Sweet. Thank you, Mark. I appreciate that. Let me right back. Thank you. Okay. Yeah, you can comment down there. If you are a Seeking Alpha subscriber, go and comment. That's what I'm going to kind of say on this one. And go and if you're not a Seeking Alpha subscriber and you want to comment on Spotfiy, either one. But yeah, this Citrini research was a big deal. We'll talk about that. Because Citrini research became the top. I'll show you how to look at the best sellers, but they became the top bestseller in Rising and stuff just based on the coverage that they got. They already were a big Substack, but this just made it like crazy. And God, I wish I wasn't so purple. I probably have to wear white so that my skin looks at least a little bit brighter. I don't know. And yes, Nathaniel, happy NVIDIA Day for those that celebrate. Hut, after reporting earnings, is kind of flat. I mean, that $60 is going to... Eli's right. I mean, that's $60. And if you don't know what I'm talking about, if you go into the chat section, Eli down here... I do have new replies too. Still owns a lot of Bitcoin, but Eli did a hut. It's interesting. I mean, again, I think he nails it exactly. Hut is going to be a tough one. That's one that you've got to kind of sit there and hope that it gets over. And Tumley Spies, yeah, a bottom in software. I've got that one open. Okay, so let's go and get this started. I've got so much. I've got a appointment today. What time? I think I'm meeting with Seeking Alpha again. Yeah, 2:30. Okay. And then I'm doing another guest spot on a podcast tomorrow. And then I'm meeting with TrendSpider. Oof. This has become a damn business. Again, hit the thumbs up button. Okay. Let's start the podcast. I'm going to hit record. Good morning. It is Wednesday, February 25th, hump day. There's almost too much to go over today. It's going to be a disciplined show. It might be a little bit long. I may talk a little bit much. And if you like my talking, maybe you enjoy that. On the Investing Experts podcast, which I'll lead you to, I think Rena asked me like 2 questions. So I just went on and on and on. I definitely talked too much. But get the tools that you have available to you and do your research. My tools constantly, and I'll tell you, TrendSpider with Sidekick. Again, get an annual plan, and I'll give you the 4-hour algorithm, all my custom watch lists, everything that I use. And the sweet spot for Seeking Alpha is premium and alpha picks. Premium is what you'll see me go through with the quant, what you'll see me analyze stocks with. And then alpha picks, you get a pick on the 1st, which we'll get next week. And you get a new pick on the 15th, and they tell you when to sell. So my tools are clear and obvious. You can get all of the links, by the way, on Linktree, linktr.ee/dailystockpick. But it's crazy. You had the State of the Union last night, a report by a top Substack, which I am on as well, Substack, dailystockpick.substack.com. That's where you can get all of my newsletters that accompany this podcast. It took the market down. You've got NVIDIA earnings. We'll go over all of the earnings today because there's a huge one after the bell with a crazy amount of earnings and upgrades going on in the market right now as well. You had a Circle, which reported this morning, the crypto stablecoin, it's up 20%. We'll take a look at that one. But you've got NVIDIA, and then you've got all the software names, Salesforce, Snowflake, and others. And you know what Tom Lee says? Tom Lee, and again, he has me, I think it's a badge of honor. He has me blocked because he said my newsletter is competition for him. But he said, hey, this could be a bottom in the software stocks. And IGV's top 5 holdings are Microsoft, Palantir, Salesforce, CRM. In the Investing Experts podcast, let me just bring up for you something very shocking that I found. So Microsoft, under $400. You're trading at $391 right now, okay? In the system software space, the quant ranks at number 5. You got OneStream, you got UiPath, you got ALLT, and you got these. These are the top 4. They're the only buys. Everything else is actually a hold or a sell. But Wall Street rates this one a strong buy with a 53% upside to their average price target. That's huge. But I want to point out to you, okay, the ease of analyzing a stock. You can see the forward PE on Microsoft is 23%. The growth on Microsoft, 16% revenue growth year over year. The profitability, 68% profit margins. Great. The momentum has sucked, absolutely sucked. But the revisions are actually pretty good. 28 revisions up, only 1 down on earnings per share, 34 up on revenue, 9 down per share. But I want to really point out this valuation, okay? Take a look. We're going to go through the same exact measurements for Exxon. Whereas Microsoft was 23, you're paying 21 for Exxon. at an all-time high, okay? Its valuation against the sector, extremely expensive. Its growth, Microsoft is growing 16, 17%, I think, year over year. They're actually losing 4% of revenue per year. The profitability, 69% margins on Microsoft, 31% on Exxon. But the momentum has been phenomenal. These are all positive. All of Microsoft's 3 months, 6 months, and 9 months and 1 year were negative. Revisions, well, they're bringing them down. So again, when you look at this, you're up 24% year to date. And on Microsoft, year to date, you're down 20%. Which one would you rather buy and hold for the next 5 years? Again, easy, simple research. Compare them. You could even put this into the peers category or a compare chart, because I do comparisons all the time. Okay. Memory names. You want to compare STX, WDC, SanDisk, and Pure Storage? You could put in Micron into this. You can compare them all. The only strong buy in the quant is SanDisk. SanDisk has green across all of the quant factors. And the return, phenomenal. 1 year return, 1,213%. 9 months, 1,612%. Look, it's beating everybody. So you want to compare those names, something like Microsoft and Exxon, you can do it in Seeking Alpha. Again, that's the power of Seeking Alpha. Now, I want to bring you to Substack, okay? Because Citrini Research, which is a Substack, they are now the top Substack, finance Substack. And if you want to know how to find this, you literally just go to Explore, and then you go to Finance, and you'll see up here, there is a top bestseller right here. See all. The Rising, this is the number of new subscribers, and Citrini's at the top. And then the bestseller, they have even gone over Michael Burry and Doomberg in compounding quality. And again, I subscribe to Burry. I don't pay him. I subscribe to James Bullard. I don't pay him. But they provide good research. But the market got tanked because of this. The 2008 global intelligence crisis. How worried should we be? Nothing underlines, and I'm going to read from the Wall Street Journal right here. Nothing underlines the sensitivity of stocks right now quite like what's happening on Monday, when one of the factors behind the Dow's 800-point drop on Monday was a 7,000-word hypothetical. This was a hypothetical. A viral report by Citrini Research tapped into the new strain of fears about AI, painting a dark portrait of a future in which technological change inspires a race to the bottom in white-collar knowledge work. Concerns of hyperscalers overspending are out. Worries of a software industry disruption don't go far enough. The global intelligence crisis is about to hit. For the entire, and this is a quote, for the entirety of modern economic history, human intelligence has been the scarce input, Citrini Research wrote in the Post, and described as a scenario dated June 2028, not a prediction. We are now experiencing the unwind of the premium. Many of Monday's moves roughly align with the situation outlined by Citrini, in which fast advancing AI tools allow spending cuts across industry, sparking mass white-collar unemployment and in turn leading to financial contagion. Software firms Datadog, CrowdStrike, and Zscaler each plunged more than 9%. IBM declined 13%, its worst one-day performance since the year 2000. American Express, KKR, and Blackstone, that is what's going on in the market. And when you just Google CNN Fear and Greed Index, you'll pull up the Fear and Greed Index. We're in fear. By the way, Monday, we were in the 30s. 1 week ago, it was 41. So when others are fearful, you are greedy. When others are greedy, you are fearful. That's the Warren Buffett quote. So you do what you want. I think that this particular one, Citrini's research, it does not tell us anything new. Here are the 5 bullet points, and Udom points it out. The easy money phase of the AI boom is transitioning into a period of higher scrutiny. The rise of agentic AI, especially without human oversight, creates a fragile economic ecosystem. The growing gap between the values move fast, break things versus the regulatory frameworks that can't catch up. That AI is no longer just a productivity tool, but a potential liability, and that execs should quickly prioritize digital governments and smart contracts to mitigate the risks. That rapid, unchecked development of AI is beginning to pose significant risks. Again, they're just pointing out what you see. What they're not pointing out is the history of what has happened in markets. When the wheel came about, humans are never going to walk again because they can ride. Not true. When farming equipment and the tractor came out, well, farmers are never going to, we're never going to need manual labor anymore. Well, that's not true. When computers came out, oh, you're not going to need any more employees. Oh, that's great. When the internet came out, well, nobody's ever going to need to drive into an office again. Not true. So I think until you start to see something come true, do not fear the market. Take advantage of the market. And so how worried should you be? Maybe not much. Again, I outlined yesterday, I was on the Investing Expert podcast. If you are a Seeking Alpha member, go to this link. It's got the full transcript of everything, and you can go down to the bottom and just comment. Say, hey, Gary's great. I've got a couple of people already commented down here. And if you're not a Seeking subscriber member, or you want to comment on both and just say, hey, thank you for what you do, then go to the Spotfiy one. We've already got 4 or 5 people commenting on the Spotfiy one. So it's a good podcast. I didn't bring up anything like specific. It's general things, but I talked up Sidekick, and I showed Rena about Sidekick, and I use Sidekick all the time. You see me use it all the time. I love Sidekick. And I showed her how I use Sidekick alongside Seeking Alpha. And so the two tools together, she was shocked. She said, I didn't even know this system existed. So again, I pointed out Microsoft, the PE on that one. I also had Sidekick pick 3 energy names for me off of the XLE. And so that's in there. Again, I think it's a good podcast. I think it's good. One of the questions that she asked me what I own. And so I said, hey, I usually don't bring up my whole portfolio, but I'm going to give you my best performers yesterday. The ones that Fidelity said were my best performers. AMD. Why do I own it? It's a top 2026 stock. One that I bought the dip on. Under $200. Thank you. I can get it under $200. Yes. You're trading at 213. I like this. 215 right now. I like this one. You can see when the RSI was up here at 78 on the 4 hour, I didn't like it. When the RSI was down here on February 5th, down at 190, I liked it. Again, buy the dip on things like this. You can see the weekly. I pointed this out all the way since December that, hey, we needed a reset. So I bought here. And you can see, should I sell here? Absolutely, you should sell at 265. If we get to 265 again, I'm going to trim it. So AMD was one of my top performers yesterday. Another one that I've been clear on, that I've been adding to. I have been clear on where I like this one. It's IREN. I bought way back, I think it was way back in here somewhere, or I think it was this $17 in August that I loaded into this. I sold my Salesforce. I think it was Salesforce or something, or Palo Alto. I sold a bunch of this. It was probably my entire Salesforce position in my Roth IRA. I had held Salesforce for a while, didn't do much. I loaded into IREN. On the way up here, I've been selling up at top here. I won't sell under 49. I will be buying more, and I've got alerts for that one. And my third top performer, Sterling. Sterling Infrastructure. Look at this one take off. It's an alpha pick. I'll mention it in a few minutes. But I want to bring up my worst performers. Worst performance, Wells Fargo. I thought I had sold this off at 87. I guess I didn't. It was listed as a worst performer. Do I want to sell it right now? It's at 85. I'll probably sell it at 85. The difference between 87 and 85, not that bad. But when you get here to yesterday, where it's got its low at 82, I don't like it at 8, selling at 82. It's too close to that 81 support level. So I'll sell at 85. I'll be fine today. But I still have it in my portfolio. I don't particularly love this name. I love this one at 40. I love this one at 60. And yes, I loaded into this at 60 on this dip because I like the stock. Not a huge fan of it at 80. Another one that I own that's a worst performer, Palo Alto Networks. This one should have trimmed at that 150 level. Should have trimmed more. Still like this one to get to 200. But when you look at this one and you look at the fundamentals of this, again, it's a software name and it has been taken down. But when you look at this PE at 38 times forward earnings and its PEG ratio going forward of 2.71, it's re-rating because they're not growing as fast as they were. So the growth has slowed down. That can be a very quick change. And another worst performer is Credo. I've had this one analyzed by Sidekick. And we can go back and look at Sidekick. Where is my Credo? We're going to look for, there it is. January 29th, okay? When I wanted to buy more, it said, do not buy more. I think there's a big, there's a big exclamation point. Do not buy more. It's somewhere here. But for new money, do not buy at 133. Set alerts for 100 to 110. So if we just look at this, again, this was, let's see, January 26th. I'll point out January 26th right here. It said, do not buy at 133 right here. How much did that save me? Let's just go and look. That one saved me, let's see, 25% drop. 25% drop. And it said literally, let's say, for new money, do not buy at 133. Set alerts for 100 to 110. Well, I got it below 100. For current holders, trim if possible. Yes, I trimmed at 133. Hold core if you believe in the long-term story. Yes, I believe in the set stops for 100 for risk management. I don't use trailing stop losses. I just don't. I don't believe in them. If I'm going to hold a stock, I know where I'm going to sell it. And I'm not going to sell this stock under 100. I'm going to wait for it to pop to 130s, and then I'm going to start trimming it. And until it gets to that 170 level, I am not going to load into this one anymore. I'm going to trim it around 130 and I'm going to buy more around 100. Rinse and repeat. So there's a look at my portfolio yesterday. And it's super, super simple. And yesterday I had office hours. And one of the things that I brought up with the group, and this is the office hours. Again, you realize it's exclusive to Substack. It's for paid subscribers. You can ask me any question that you want. But one of the things I brought up was IBM. Any reaction in the market is an overreaction. This one, largest drop since the year 2000. This is crazy. This is Jefferies reiterated their buy rating and a $370 price target. This stock is now trading for $233. Look at the 52-week range. You're buying it at the bottom. And literally, the CTO is telling you over a couple of articles, he's telling you, this is Thomas, says translation isn't monetization. Translation captures almost none of the actual complexity of their services. That's it. So these office hours, they happen every Tuesday at 9 a.m., but I'm going to start shuffling the time around a little bit to accommodate folks in other time zones. I had Perplexity look at the subscriber base. There are 23 different time zones. So I'll try and make it at least as accommodative as possible for a few times of the year for folks who can easily attend. We've had in this chat session Dubai, we've had England, we've had Southeast Asia, all three of the U.S. time zones. So if you want to join us before the market, I know I've got a big paid subscriber base in Australia and New Zealand. So some of you folks can't make it at 9 a.m. So if you're a subscriber and you want office hours, go into the chat, send me a private chat, or just put it into the group chat here, whatever you want. And just ask. Just remember, go to Perplexity or something before you actually ask. And just tell me about, which New York time, what time in New York time zone you want. Don't tell me 9 a.m. New Zealand time, because then I got to go and do work. And I don't want to go and do work. But let's talk about Alpha Picks, okay? Alpha Picks is a data-driven portfolio. It has beaten the S&P. You can see it up 293% during the same time period. It's 80%. And yes, the price is $449. You save $50 if you go to my link on Linktree. It's a fantastic portfolio. And you heard one of my top performance was Sterling. Okay, it was one of my big winners. It was up 6% yesterday. I went over this in Sidekick with the paid subscribers yesterday. So I went over Sidekick and I said, hey, Sterling is about to offer, they're about to go over their earnings. So do a full earnings preview of what it is. And you saw how great January was with Credo. Well, it gave everybody do not buy before earnings. So it gave you a 30% best probability case, base case of 50% probability, and a bear case 20% probability. Again, this is what I go on. Clear direction, clear reason, clear strategy given. If you own this one, I'd suggest watching earnings closely, as Sidekick gave some warnings. In my Alpha Picks portfolio, again, the actual Alpha Picks portfolio, I only have one stock that has lost more than $200. And I have heavy six figures. We're not talking just 100,000. We're talking significantly more than $100,000. Managing the positions is key. Letting the winners run and allowing the losers to just stay at a holding percentage. And I'm using Sidekick to do that. I'm using both Seeking Alpha. You know, we can go to Sterling, STRL, and we can look at the grade of Sterling. It's a buy. Has it been a strong buy? You bet. It was a strong buy here at 351. Where are you? 459. So I'm using those two tools together. And I'm allowing the losers to just go to the holding percentage. In Alpha Picks, there's a holding percentage on the right-hand side of the portfolio. Managing the portfolio is either very simple, where you just do what they tell you, but it can be more complex by using the tools that you have in front of you. So I let it analyze the portfolio, and it guides me to what deserves to be overweight. And yes, Sterling was overweight. And I was going over my Alpha Picks portfolio last night and looking at some of the gold miners. I saw one of the big short traders. So if you ever watched the movie The Big Short, he was going over what he likes. He said the miners. This is Danny Moses. And go and look him up. He's a great, great trader. He was on CNBC last night playing conviction on gold and gold miners, GLD. And so your GLD, again, this kind of trades like SPY. So you're under $5,000 an ounce with gold. But he was going over, you know what? Gold miners, even if gold were to dip down below 4,000, he said the gold miners are still making money. The miners didn't go down as much as gold. You can see year to date, gold is up 19%. I'll bring up a gold miner in the Alpha Picks portfolio, up 40% year to date. Again, a gold miner, SSRM. It was chosen in June of last year. It's up 39.8%, so 40% year to date versus gold, which is up 20%. Alpha Picks has been clear. The gold miners are like leveraging your gold play. Again, this stock alone over 1 year, because it was picked, is up 192%. It was picked in June. So year to date might be best. Maybe 6 months, you're up 75%. This may have just paid for everybody's yearly subscription just in this stock alone if you overweighted it. And again, it's been a strong buy. And if we look at June of last year, you know, say June 15th, I think it might have been picked, June 16th, $12.93. Where are you today? $30.66. Rinse and repeat, but they're not all winners. Okay? One of them that actually is in the portfolio is PARR. Okay? This is Par Pacific Holdings. Looks like a good stock. It's in the oil and gas. It's in the energy sector. It might have been good. They just reported earnings. They're down 12% in pre-market. Okay, this is one of the losers in my portfolio, in my Seeking Alpha portfolio. But you know what? This one, the actual holding percentage, I have trimmed this one. As it's gone down, you can see the price action going down. I think it was picked in November, and the price action has gone down. I haven't added it. Why? Because it hasn't gone to a strong buy. The history of this one is that it's been just a strong buy for a couple of days here at 40. When it got a strong buy at 40 and you got to 42, and then it went back to a buy, you could have sold it for a nice 5% gain. Fantastic. But the key point of this is that PARR's holding in the percentage, as long as it's not overweight in my portfolio, this one is a 0.56% holding. Your portfolio will barely show a down day if you've got a stock that is 0.56% of your entire portfolio and it's down 12%. Again, the Peter Lynch quote that's attributed to Warren Buffett, selling your winners and holding your losers is like cutting the flowers and watering the weeds. The quant changes and the charts that show this, that is why I recommend the bundle, because you can do your own research like this. And you can overweight and use the Alpha Picks portfolio to even get better gains than what the Alpha Picks portfolio has. So again, you can sign up at Linktree if you want. But that's how I'm managing this portfolio. And it's been super successful. So let's talk about something else that's in the market that I've been screaming about. SanDisk. SNDK, Citron, not Citrini. I got this confused. I thought they were one and the same. But Citron Research just put out a short. Are you going to short SanDisk? Because when we look at this chart, remember, shorting, there is no cap on what you can lose when you short a stock. I repeat that. When you short a stock, if you are in a short squeeze and you can't sell that stock, they can wipe out your entire portfolio, no matter how, if you just own it. Long, you're only limited to what you've actually put in. Short, it's unlimited. So it's risky. And Citron is saying, hey, the market is pricing SanDisk like it's NVIDIA, but there's one problem. NVIDIA has a moat. SanDisk sells a commodity. They're making that point. And so you can read Citron's actual note here. You can read the actual reporting of Citron in Seeking Alpha, but they point out that the cyclical cycle of nature of memory and Samsung having a hold on the market. But this is just like Burry. This could just be bad timing. It might be right, but you might see this one go to 1400. So I went to Perplexity. Again, use the tools that you have in front of you. Perplexity is one of them. I said, can you tell me about the short position Citrini took on SanDisk today? What is Citrini's record when it comes to shorting stocks? Because I've never shorted a stock and I don't want to short a stock. But if I'm in a stock and it's got a short report, I may want to get out of it because they may know something that I don't. And this is Andrew Left, who has a sketchy as hell past, just so you know. That is Citron. Now, he might be right about this one, because his research has been active for 17 years with 200 plus reports. He makes a ton of money by putting this out, seeing the stocks fall, and then he starts to cover his shorts. Okay, they have some high profile wins. Valiant, several frauds, and broken models over the years have helped build their reputation. However, here's the thing. He shorted NVIDIA. He shorted Tesla. So while he says in that thing that SanDisk is not NVIDIA, he also shorted NVIDIA. And he's famous for getting caught in the GameStop stuff. I don't want to follow someone like that. Are they successful overall? Question is, it's questionable. He's had a couple of good years. And Citron's edge is usually spotting valuation, fundamental disconnects, and aggressive promotion, not in timing the exact top of the cycles. So again, given Citron's mixed but non-trivial history of big winners and big losers, you would treat this one informed, high-conviction bearish view, among many others, not as a guaranteed signal, especially after a 10 to 12 times move in the underlying position. So again, I don't necessarily want to listen to Citron. I'll put it into my memory and say, hey, there's a short one out there. But Udom, who I actually trust, who has made some great calls, he's out there saying, hey, SanDisk, it's a buy. To buy. And so you want to look at these differing opinions and decide on your own. Here's Wall Street with Morgan Stanley highlighting AI boosts NAND demand, but Asian module makers' margins may soon compress. They're kind of saying the same thing as Citron, but they just don't know the timing. And then remember on Monday, I said, hey, SanDisk has a huge announcement. Was this the damn news? That next generation portable SSD portfolio to support faster, more. That's not like a huge announcement. So SanDisk, I still like it. It is still a huge rating. I think it's a strong buy. 4.99. You know, Micron, MU, has slipped. It's not the strongest stock. It's still 4.99. But when you go to the top stock section down here, Micron is no longer the top one. You know, there's a bunch of other ones up here in the top rated stocks. So again, do I think that Micron deserves anything lower than $400? No, I think it's putting in a nice support level. So if it goes under 400, I'm going to add more. And so you have to understand what you're buying in this market. PayPal, this is a shit show of a stock, but this one has been climbing incredibly. I think it was Monday, it came out, hey, there might be a buyer of PayPal. And then we find out yesterday that maybe Stripe is the one buying. It makes sense for Stripe to get something like Venmo, but all of PayPal, because PayPal is a $43.29 billion market cap. So in order to buy a company, the company would have to basically pay more than $40 billion. So again, using the tools in front of me, I went over to Perplexity and said, hey, it's rumored that Stripe may buy PayPal. Can you tell me the price they might have to pay per share? And does Stripe have the money? It tells me I don't know the price. But Stripe is big enough to be a credible suitor, but it does not appear to have the spare cash to simply write a $50 billion check. A real deal will be highly structured and dependent on markets. And up here, they framed it. They framed it that it's probably going to have to be a $50 to $60 per share price. Let's see, putting that together, a realistic ballpark if Stripe or another strategic actual did do full takeout would likely be between the low 50s per share, which is perhaps a stretch in case it goes to the high 50s, low 60s. But at that stage, it's purely speculative. So when you look at PayPal, you want to look at the $50 as your top. Are you putting money into a failing business at $47 for the assumption that somebody may buy it at $50? Risk, reward. That's it. So for me, it's not worth it. Again, evaluate and use the tools that you have in front of you. This is a stock that's a sell, and Seeking Alpha says it's going to perform badly. Why? The company has a one-year performance of minus 53%, while the financial sector median is 9.53. Find another transaction payment services like Remini Global, like Corpay, like GPN, which, by the way, I brought up on Monday as the top gainer. You can see this one spiked. It's pulled back. It's spiked. Wall Street has a price target on this one, 30% upside, $101. So understand what you own. Use the tools that you have. Again, my tools, Premium and Alpha Picks, and TrendSpider. So let's go over some other stocks. Hamid, who I follow, who got into Micron, who has a $900 price target on Micron. His biggest conviction is Rivian. And here him and Dustin sit down with the CEO, RG Scaringe, of Rivian. Is this one that you want to put your money into? You have to decide. Okay, I have thoughts on this one. I'm not a huge Rivian fan. I love the trucks. I love the car. I love the CEO. But they haven't been through production hell like Tesla was. And so you're still paying a lot of money. They're not making money yet. Okay. Their profitability, they're only, growing gross profit margin of 2% on a car. This was hugely less just like a year ago, but they're still losing money on every vehicle. So do you want to go into that? I would watch this interview. It's 34 minutes with RJ. Hamid and Dustin are great. And these are two investors who actually have money. They're just like me and you. They just may have a little bit more money. In fact, Dustin probably has less money than me. Hamid probably has more money than me. But both of them are big on Rivian. Now, one that I'm big on as this plays out is the Warner Brothers Discovery and Netflix and Paramount fight for Warner Brothers. Okay? Netflix is a stock that's beaten up. Now, here's the thing. There is a $2 billion, $3 billion payment to Netflix if this gets broken up and sold to Paramount. This is a stock that over 1 year is down 21%. Year to date, it's down 16%. It's still expensive at 24 times. Remember Microsoft? 24 times forward earnings. It was 23 times forward earnings, growing at about 16%. Netflix is the same thing, growing at about 15, 16%. Their profitability, though, 48%. Better profitability. The momentum has sucked. The revisions are down. Why? Because they're saying, hey, they're going to have to buy this damn Warner Brothers Discovery. Meanwhile, they're not growing as much. They want to do it because Netflix knows something about the Warner Brothers Discovery content library in their data. And so that's why they want it. But the street is literally saying, with this price, you're paying too much. And you're down at the bottom of the 52-week range. Wall Street, on the other hand, is saying, hey, it's still a $111 price. And they've brought it down. Have they brought it down enough? And that's the question. I think if Warner Brothers actually goes to Paramount, and Warner Brothers is saying, hey, the Paramount Skydance may be the superior bid. That may be it. And Paramount is going to pay the breakup fee to Netflix. That's the big thing. So I think Netflix could fly if that particular deal goes over there. Now I want to bring up another one, because this is Chris Camillo. If you don't know Chris Camillo, he's one of my favorite investors, arbitrage investor. He basically takes things on the, and I'm going to hit the like button. You guys should always hit the like button, whatever, rate me 5 stars. But Bloom Energy is one that he bought the dip on. And he has so much conviction on this one. And I'm starting to get a lot of conviction. He basically said, hey, this dip here from November down here, I'm going to take this one out. This is a 615% gain. That's a huge, huge gain. Okay, this is the leader. When you go to IWM, just so you know, IWM, everybody's talking about this particular ETF is the greatest thing. Go to their holdings. What's their number 2 holding? It is Bloom Energy. This is one that has been on fire. 4-hour algorithm got you in at $20 there, and it's been positive ever since, with a nice 392% gain, a nice 67% gain. He bought the dip in December. He bought the dip at 90, and he started adding to it with options. And this particular discussion, this is 8 minutes long. Okay, it's 8 minutes long. They talk about it. And Jordan here, who's also on this Dumb Money podcast, he says, hey, I'm an engineer. I still don't understand what they do. What Bloom Energy does is they basically have a data center create their own energy from natural gas. I still don't understand it. I haven't dug into it. I don't understand the whole thing, but that's what Bloom Energy does. And is Bloom Energy a great investment? These guys have made tons of money. We talked about FOMO all the time. This should not be a FOMO stock. It's a hold from the quant. It's not a buy. But when you go into their valuations, they are extremely expensive right now. Extremely expensive. Wall Street has a $143 price target on it. So strategy on this one will be key. We can go and ask, we're going to go and ask Sidekick. Let's see. We're going to say stock analysis overview. I think I have a thing here. Yeah. Let's just take this prompt. And by the way, I gave all the paid members all of these prompts. We're going to do Bloom Energy. We're going to say, hey, do an overview of Bloom Energy. BE is the symbol. Like you're a Wall Street analyst, and give me a complete picture of whether I should buy it and at what price. And so we'll come back to that. But this entire 8 minutes, it's 8 minutes. It's gold. And I do think that these guys have it right. Now, is this going to become 50% of my portfolio? No. I'm going to wait for Sidekick to tell me what price I should do it. I'm going to set an alert, and I'm going to stick to that. Because my conviction now, after listening to just this 8 minutes and researching the stock a little bit, my research makes me think that this should be on my immediate buy this now list. So I'm going to literally go over here and Bloom Energy, and I have a list of buy on pullback right here, buy on pullback. And I just added it to the list. So now when it pulls back, I can also do another entry on this one and look at it. But I can set alert so I don't have to sit there and watch this. I know that I want this, and I'm going to start adding to it, because when we look at this, just so you know, when you look at this on a weekly basis, look at how it's shot up. And that $43, it just blasted through that. That was the IPO, then it got up to 43. This is 2018. And then it dipped all the way down to $3. Imagine buying this at $3. And then you're sitting there and it does nothing, and it continues to go down for all those years. And then all of a sudden you get this volume pop up. Again, I like this one. This is a great stock to have in my list. And what does Sidekick say? Hey, Bloom Energy has transformed from a struggling clean tech story into an AI infrastructure play. The stock has surged 270% from late July, driven by AI data center power demand. However, this rally presents material execution risk, and it goes over all of the risk for you. So again, this is Sidekick. What are they telling you? Do not buy at current levels. Here's the thesis. Aggressive strategy, 120 to 130. If the AR narrative holds, conservative, 85 to 100. That would be a 50% pullback. Deep value, buy at 50 to 60 if the 2026 guidance proves too optimistic. Why these levels? It gives you the why. The trade setup, if you must have exposure, by 25% at 160 to 165. Add 25%. Solid strategy. The final verdict, Bloom Energy is a high risk, high reward speculation on AI power infrastructure. The company is executing well, but the stock has gotten ahead of itself. 2-to-1 downside to 80 versus the upside of 240. Probability weighting, negative or current entry. Recommendation, wait for a pullback to 120 to 130. I will set my alerts to that. And then I have the entire trading strategy, again, using the tools that you have in front of you. And Chris, in this 7 minutes, I think it's later in the 7 minutes, he brings up a fantastic trade. He literally tells you that once IBIT and crypto have popped, that 2 or 3 days later, you see hood pop. So today, you're seeing IBIT up 3%. You're seeing hood up 3% as well. So again, it seems to be closing that arbitrage gap. But this is how he does trading. Learn it. And we've got huge earnings tonight, okay? Circle. This is one we just talked about, how crypto pops. Crypto's popping today. Circle, this is a stable coin. It's not covered by the quant, but we can go in and we can look at the valuation. We can look at all of the stuff, the growth, 15% revenue growth year over year. They just announced earnings. It's popping 20% in pre-market. This is a huge deal. They killed it on earnings. If we go over here to again, they beat the Circle. They beat their revenue by 3%. Their earnings per share, they beat by 250%. And you can read the story. Stock climbs after USDC adoption growth continues in Q4. Huge earnings. So crypto isn't dead. It's just about where you're putting your money. And so we can even go in here and we can do the same analysis. I'm literally going to do the same analysis. Let's see. We're going to do. No, that's Bloom Energy. I got to change that title. But we're going to do the same analysis of Circle. I'm just going to change the symbol. CRCL. And let's look at that. And I'm just going to change this title real quick to Bloom Energy. Rename chat. It's not Baidu. It's Bloom Energy. BE. $sign BE. BE. E. Oh, stop. We're going to take that out. Proceed. There we go. Now, this is just doing the Circle stuff. So, you know, so we're going to go and look on. We'll check back in with that. But NVIDIA, I've been pointing this out, and I trimmed at 192. Let's go and look at NVIDIA real quick to see where NVIDIA is trading. I traded at 192. It's at 194. I sold 50% of my position just because my question isn't whether they'll beat. I think NVIDIA is going to beat. I don't think that's in question. It's going to be whether it can get out of this range. And that's the real question. And so when I asked Sidekick, it said, don't be greedy. My average purchase price was 30. So do I care if I sold at 192 and it goes to 195 when my average purchase price is 30? No. But tonight are the big earnings for NVIDIA. Their expectation, $1.50 earnings per share. They earned $1.30 last time. Revenue, $65 billion estimate. They had $57 billion last time. They only beat and I had Sidekick go over this one. If we just look at, let's see, NVIDIA, I think I did this live on Monday. Yeah, pre-analysis earnings. And this is what it told me. And this is the chart. It went over all the way back to February 2024. Do I expect this one to pop 15, 20%? I don't. Could they? Absolutely. You can see February 2024. When they beat earnings per share by 11%, the stock popped 20% 10 days later. So I'll be able to buy this back. I don't have a problem. I locked in profits. It's the fundamental thing to do because when you look at this chart and you look at a weekly basis on this one, we have been stuck at that range all the way since August. And TrendSpider pointed out all the way since August, can we get out of that range? This is a great company with a great story. And then you've got software tonight. You've got CRM. You've got Snowflake. You have IONQ. You have a huge earnings. And Zoom energy reports. Let's go back to Sidekick. Let's see if Sidekick's done with this detailed analysis on Circle. Yeah. What does it tell me? The business model tells me the financial picture is mixed, analysts deeply divided, major red flags, competitive threat, blah, blah, blah. What price should you pay? At conservative entry, 45 to 50. So where's Circle right now? Let's look at Circle. Circle right now is at 73. Do you want to buy it? Probably not. Aggressive buy 55 to 58. Current price 61. Still too expensive. And by the way, in pre-market, it is up to 73. Bottom line, hold, don't buy yet. Valuation needs more compression. It will come down. If we go and look at the chart of Circle, any reaction in the market is an overreaction. And so, this 4 hour, this only goes back 8 months. Is that a stock you want to buy the pop on? Probably not. But it shows you that crypto is a place where you can trade. So let's go do an analysis of a stock, Zoom. Let's see a pre-earnings announcement. We did a pre-earnings announcement. I've got a prompt for that one. Let's see. Can you do a pre-earnings announcement on Zoom? Because Zoom, I will bring you up to Zoom. Zoom's an interesting one because Zoom, this was the stock of 2020 because it went up so much. We'll take a look at Zoom. And Zoom is a crazy, if you just look at a weekly stock, is this one you want to buy? I mean, that to me is going decently. I mean, last earnings period, you were at 86. Now you're at 86. Is this one you want to buy? Is this a great stock? No. We can go and look at Zoom. You want to hold this one for, let's see, 5 years? You're down 77%. You want to hold it for 1 year, you're up 7%. Year to date, you're up 1%. Wall Street thinks that it's 11% upside to 97. Are you buying before earnings with an 11% upside? When it does seem a little expensive, I mean, your PEG ratio going forward is 7.58. That's super expensive, 14 times forward earnings. Again, this is software. It could get taken down. If we go and look at Sidekick, let's look at it. It's still thinking. But again, is that one you want to do? You know, Synopsys is one. That's interesting. But again, you want to use the tools in front of you. And with TrendSpider, using Sidekick, it comes with every plan. And I use this constantly. I love this tool. So Zoom reports tonight after close, current price 87, has experienced significant volatility. Key technical charts, breakdown from consolidation. Stock broke below 88 support level. 50-day moving average trading below this key moving average. Earnings trajectory. Q1, they had a 25% beat. Q2, they had a 35% beat. Then the beats got smaller. Revenue reality check. While earnings per share beats are impressive, revenue growth has stalled. And so you go down the risk assessment, bottom line, the stock is telling you something. Despite 8 consecutive earnings per share beats, Zoom can't sustain rallies. Why? The revenue growth is dead. Multiple compression continues. SaaS multiples are contracting. It's still expensive. Competitive threats mounting. Microsoft Teams is everywhere. Insiders are selling. They're not buying. My answer, don't buy before earnings. This just may have saved you from the earnings. Again, it might be a little bit conservative. You know, 4-hour algorithm makes you 30%. Buying and holding makes you 38% over the last 24 months. And the 4-hour algorithm has you out. It doesn't have you in. Maybe that one saves you too. From a weekly perspective, we can see the indicators. The MACD's right along the oscillator, but it's been there since 2022. The RSI is at a 52. That's right in the middle. No man's land. Is the risk worth the reward? The only thing that's positive on this is this 50-day trend line that it seems to be respecting. So your downside, if you wanted to trade this one and buy this at 87, I would put a loss and just understand that you are losing. And at $81, sell it. At $81 after hours, if you see it go down, sell it. Because the high, I would think, would get to 95. Again, I don't think that this one's going to pump an enormous amount. It's software. Are they going to do that? Because again, tonight, you have Salesforce and you have Snowflake. So many software programs are out there that are reporting. You got the trading desk, which is just, this is one of the big losers. The trading desk is one of the big losers of the year. So you've got a huge earnings day. It's not just NVIDIA tonight. And remember, I started off this podcast with Tom Lee calling the bottom in software. So if you have any questions, this has been a long, long podcast. Everything's on Linktree, even my email address. I thank you guys for listening to this part. By the way, if you listen to all the way to the end, just comment hamburger down at the bottom. I'll put a little star next to it. But whatever you're listening on, just comment hamburger. Or if you want to go to Substack and just comment hamburger, that's fine too. But just comment hamburger. I'll know that you listened all the way. I appreciate you guys. Have a great day. I'll talk to you later. Bye. Man, I'm tired from that one. I hope you guys stayed. I don't think anybody's here. They're not commenting hamburger. Let's go to iMovie. I thought that was a complete good podcast. And I got to put those alerts on Bloom Energy. I'm serious about that one. That one is just, that 8 minutes made me convinced that I got to get into Bloom Energy on that dip. Larry. I figured Larry was here. And Alex. And Wendy. Wow. Wow. I got a lot of people. More than I thought. I thought most people would have dropped. let's see if I can get this color right. Let's see. No, I'm still gonna look green. Let's see. Nice. I look okay. Good morning. It is Wednesday, February 25th, hump day. There's almost. Yeah, that looks okay. Rosa, Abin with cheese. No cheese, Abin. I love cheese. I mean, I will eat cheese all freaking day long. I do love cheese. Man, I love cheese. Green screen. There we go. And we're gonna do this. Oh. Raj. Yeah, Bloom Energy, and go and listen to that. I'll put the clip in here. Let me give you guys, since you guys are typing hamburger. Let me find not just the newsletter. I'll put it in here. This was such, and I don't mean for you to get off my channel right now, but if you wanted to just put that in a new window, to watch. It's such. I trust Chris that he has done his research. I trust Jordan because he's an engineer. He kind of gets this stuff. He still doesn't understand how they're doing it, but he says I get the logic around it. And then Dave on that podcast, he's like, hey, I'm not as big as Chris is. Chris is the risky one. Jordan is the conservative one because he's got like 85% cash. And Chris is making fun of, what do you have, $100,000 into that? I mean, these are big investors. These are guys, Chris is putting 60 million on probably Bloom Energy. That's just a guess. I don't know for a fact, but he's probably putting that amount on this. Quite a bit, I will say that. Okay. Let's export this. Export file. Then I got to do a save. And remember, go comment on the Investing Experts podcast. I thought it was good. I just think I talk too much. Marina couldn't get a word in edgewise. And they said they're going to put it up, like clips of it up on YouTube. We're going to go to Canva. I got to do what's the title? Yeah, let's use that. Let's use let's go YouTube thumbnail. Let me see. YouTube daily stock. Did I use that one already? Yeah, I did. Okay, can't use that one. I was gonna use this one again. But no. Let's type in market crash. Because fear works better. let's do this. Short report and AI panic. Okay, let's get all of this. Oh, I didn't get it all. We gotta make this one bigger. There we go. And put that there. Oh, I have to group all these together. Group. There we go. And we'll put this there. And then we're going to go and look at uploads. I need the shocked Gary. There we go. And we're going to edit, magic grab, and we'll just grab this, grab. And say ungroup, I need to grab this, and we're gonna no. Group those together. And uploads. Where's my SanDisk? Let's put on NVIDIA earnings. Bloom Energy, we're going to put that one in. IREN. We had Credo. I don't like that logo. Oscar Circle. I need to image upscaler. 16 times upscale image. Doo-doo. Replace. Circle. Where's my uploads? There we go. Open door. Robin Hood. Vistra, AlphaFix, AppLovin. I need NVIDIA. That's what I really need. Thanks, Donovan. Here's NVIDIA. And we'll say copy. And we're gonna add in TrendSpider. And Seeking Alpha. And I'm gonna make these smaller. That's good enough. Bring me up a little bit. There we go. Share. Download. And we're going to upload to... I was shocked that I have, I say 23 different time zones of paid members. Oh, this isn't even done. Oh, it's almost done. There we go. Yeah. CIEN is great. Yeah. I mean, year to date, 53%. I mean, that was, if anybody was ever fighting me on the free 7-day trial, that's the kill. I mean, even somebody with a $5,000 portfolio, Donovan, with a, you get the free 7-day trial of Seeking Alpha Premium on January 6th, and you take Steve Kress's, top 10 stocks and you buy it. I mean, this one's up literally 53%, like you said, 41% since you bought it on January 6th. It's a rinse and repeat thing. It's just, the guy is incredible at just picking out which names each year. And it doesn't mean you can't trade them. I've traded them. Cables. That's LITE and Credo. LIT is photonics. Yeah. I think what you're seeing in the market right now, WES, is physical stuff. So while you're in energy, which you can't see, yes, it's made. Data centers, I think data centers are the risky part, like CoreWeave and stuff like that. And memory you can see, and we've seen that pop up, but just the cables to connect these things. That's where Credo has made so much money over let's see, 5 years. It's up. It hasn't even been around for 5 years, but 105%. And that's over a year. And you look at LITE, which is the new one, year to date, that's up 105%. So in, just 2 months. And Wall Street thinks that it's worth 586. I got a clear buying strategy on this one, but I should have been loading into this. I mean, it's up another 10% today. The market's open. Let's see. I think the market's flying. What's the market doing? I'll check my Yeah, NASDAQ is up 1%. I don't know how it does Face ID when I don't even have my entire face in there. Yeah, I'm doing okay. Yeah, earnings, I don't love Credo earnings. It's still expensive, but God, these guys just continue to pump it out. I mean, that's a $205 price target, and Wall Street hasn't brought the price down while the stock has slipped. Number 2 out of 70. What's the number 1? Micron. It's just unloved. I mean, this one, and I think it was super well put by Sidekick. This is one that just got way ahead of itself. Here's one. Last week, buy rating due to its edge in data center from Goldman Sachs. We see our near-term setup for the stock are 7%, 32% above consensus. What's their price target? Sets a $170 12-month price target. $175. I mean, you never know around earnings, but I would think, I mean, let's just ask Sidekick. Let's take our CRDO. There we go. I mean, this is July 28th. Given the current date, the strategic limitations, I would not recommend entering a position in Credo based on this strategy. The small size alone makes the strategy signals unreliable. Yeah, I was asking about strategy. I mean, that was Sidekick's like first. I think that was July. I was a beta tester for them. It wasn't doing much. But let's just, can you give me an update on this on Credo with the current price action and upcoming earnings? What would your recommendation be for someone who is holding stock right now? Should I add more or should I trim? Goldman Sachs just gave a $170 price target. Bye. Is that realistic in the next 12 months? So I asked it specific questions. Can you give me an update on Credo with the current price action and upcoming earnings? What would your recommendation be for someone who is holding the stock right now? Should I add more or should I trim? Goldman Sachs just gave it a $170 price target. Is that realistic in the next 12 months? Because I don't care what price it is right now. If for some reason $175 is realistic, I will buy it $130. But let's ask Sidekick about that. And let me get uploading this stuff. Let's see, episodes. Oh no, I gotta go to Daily Stock Pick. It's because I have too many podcasts. And let's put that in there. And I've got to and we'll take that out. And Let's see. It's still thinking. TrendSpider's still thinking. Okay. Urgent update. Critical decision point. Current price. Explosive pre-announcement. Credo dropped a bombshell pre-announcement 3 weeks before earnings. Raised their Q3 guidance. That's a 19% increase. This is huge. Only extraordinary demand could cause a company to pre-announce such a large beat. Upcoming earnings. March 2nd. The setup is fascinating. The pre-announcement already gave away the upside. So the question is, what new information will they provide? Price action classics sell the news. Despite the incredible pre-announcement, look at what happened. February 9th, pre-announcement closed at 113. February 10th, gap up. High 141. Massive reversal down to 121. February 4th, tariff panic sell-off. Flash crash to 94 low. Current today, 117. The stock went from 113, 141 to 94, all within 2 weeks. Key support zones, resistance zone, technical massive distribution phase, structural lower highs. The pattern is clear. Every rally gets sold. The February 10th announcement spiked to 141, was immediately sold back down. That's classic distribution. You mentioned Goldman Sachs at 170. Let me address this directly. The bull case 175. What would need to happen? Q3 earnings deliver perfection, not just the $406 million pre-announcement revenue, but show accelerating growth, new product traction. Market sentiment might take 175 in 12 months is aggressive, but possible. Goldman's view likely assumes full year gross margin, current valuation metrics, blah, blah, blah. My recommendation for current holders, position sizing matters. What's your situation? If Credo is under 10% of your portfolio, hold through earnings. Risk reward is balanced. If Credo is 10 to 20% of your portfolio, trim 25 to 33% before earnings. If Credo is over 20%, trim 45 to 50%. I mean, it's just common sense. Technical setup is terrible. Stock can't hold rallies. I mean, that's what we're seeing. The stock strategy is wait. Post earnings, clarify March 3rd to 5th. Let the earnings settle. Sell if they can hold. If they can hold above 110 to 115. Deeper pullback. The target entry 85 to 95. This would test the February 4th low. Option 3, technical breakdown. If the stock reclaims 140 and holds for multiple days, would signal the trend reversal. Game plan. So it gives you a full game plan. Options market signal. Final verdict. I still believe Credo's story, but valuation elevated, technical structure broken, customer concentration severe risk. Achievable, can it hit 175 by March 2027? 30% probability. More realistic, bull case 160 to 180. My personal move if I were you. Here's what I would do. What I'm waiting for in earnings, bottom line, should I add or trim? My answer, trim 25 to 40%. The Goldman Sachs 175 is possible, but unlikely. The stock has been destroyed technically, and it has been destroyed technically. I mean, that's clear. Technically, it's just been, that 97 that I had in there was support, and that just comes from that previous high back in June. And we've seen that kind of range up to the 143. You can see that 134, which is just a couple of lines. Maybe it's a little bit off, but that's the zones that I have in there. So again, I think they're giving you solid financial advice, even though it's not financial advice. I think they're giving you portfolio management 101. It's a good, hey, if it's too big a position, we've got too many obstacles in the way, and it makes sense to trim. I don't know. Let me see. How much Credo do I have? And I own it all in my Alpha Picks portfolio, which, by the way, is up like 1.2% today. Credo. My holding percentage of account, 5.8%. I sold that rip up to 140. So now it's 5.8% of the portfolio. I'm sitting on 68% gains So it is, I think it's overweight. I mean, let me see. Credo in Alpha Picks. I can't look on the screen because, let's see. Credo in Alpha Picks. I think I'm underweight. No, I'm overweight. It's 2.21. So I'm overweight, but it's a strong buy. I mean, that's why I'm overweight, is because it's still a strong buy. I wanted to trim more. Now I remember my decision. I wanted to trim more, but the average price target is $205 and it's still a strong buy. I don't know why the hell it does this. Let's log out and log in. There we go. I think somebody might be using my login, but in the other room, or it might just be the other thing here. Let me just upload this to two different places so that I can get started once I get off. Dashboard. Create new podcast. Select file. There we go. We got them uploading to both. But yeah, Credo, I mean, it outlines it perfectly. I like this. And the market, I mean, the market's doing pretty well. What's up 3%? IBIT and Hood. Goldman Sachs under $900. I'll probably buy more of that under 900. I think the financials again are simply putting in a pullback based on the Citrini report. Kind of, they think that we may be heading towards a white collar downturn. Okay, I'm gonna get out of here and upload this stuff. Thanks you guys for hanging out. Thanks for saying hamburger. I appreciate everybody. I will talk to you later. Okay.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick and fears.